Why is Bitcoin not pumping? That is the question we're going to answer today in today's market update video. Getting this question a lot lately, just being out in public and talking to people about what I do, trading, financial markets and crypto being one of the main markets that I trade. A lot of people keep on saying to me, oh, that Bitcoin, yeah, that thing's dead, isn't it? Or, what happened? Oh, they had such a big, they had such a big crash. Is it done now? It'll probably never recover. And, seeing a lot of people on crypto Twitter and stuff like that talking about, Bitcoin's never going to make a new all-time high again and all these sorts of things, right? It's just amazing to see that every cycle around the same time, people talking about the same stuff. And, exactly 4 years ago today, we were seeing these exact same comments, exact same conversations all over the internet, in public as well. When I talk to people, specifically, I remember I was playing basketball and I was chatting to some of the guys in my team before the game one day. And yeah, I was talking about trading Bitcoin. And one of my friends, his instant answer was like, oh, I thought that was dead. And this was in the same time period when we were around that, 2019 early period after Bitcoin had sort of had its run and then pulled back again. And yeah, what do you know? Shortly after that, about 6 months later, we're pumping once again. So it's important to understand the cycles. I think the other important thing that a lot of other people miss as well is the reason why the cycles actually happen and how it's actually programmed in to the code of Bitcoin. And the people who are, say, suppressing price, and they're not really artificially suppressing, it's just part of the way that the system works with mining and the way that the miners operate their business to stay profitable over the 4-year cycle period and extract maximum amount of profit from the Bitcoin network and operating it as miners. Right. So it's important to understand that. And then I think the other thing that's really important that a lot of people seem to miss is how the macro economy ties in with a 4-year cycle, where we are with that right now, and global liquidity, right? That's what macro cycling is all. It's all about global liquidity, right? And if you can understand that, when I say global liquidity, I mean how much money the Reserve Bank of Australia is putting into the Australian economy. How much money is the People's Bank of China putting into their economy? How much money is the Federal Reserve putting into their economy? How much money is the ECB taking out of the economy? All these factors happening at once. Some countries putting money into their economies, some countries taking money out of their economies. Typically over the last year or so, since pretty much the top in Bitcoin, November 2021, was when all the nations pretty much around the world, led by the Federal Reserve, actually decided to start drawing liquidity, taking money out of their economies, right? And we actually ended up having the same thing happen in the ECB, which is still happening quite dramatically at the moment. I'm going to show that chart in a second. But it's important to understand, how all these factors going on affects the price, because just the same as the property market, and we can see that very much in Australia at the moment, the Australian Central Bank, the Reserve Bank, printed a whole heap of capital and injected into the markets during COVID, and property prices increased pretty much 100%, right? Because what does everybody love to do in Australia when they have excess cash? Buy property, right? And so the same thing happens with Bitcoin all around the world when the global liquidity, the balance of all those nations injecting capital into the markets is going up. That is going to make Bitcoin's life a lot easier to start trending to the upside. When global liquidity is actually trending down and going to the downside, that actually makes our life a lot more difficult to pump and to rally, right? So when they're injecting capital into the markets, all assets go up. Bitcoin, because it is actually a really good inflation hedge, goes up in price as well, which is what we saw over the COVID period, right? I might just get this chart up quickly to show you guys, to give you a little bit of an explanation. But here is the example, right? We had COVID, which all markets around the world crashed very, very violently. And then basically what happened, you had the Federal Reserve and the US government teamed up, And they decided that they were going to inject massive amounts of capital. They actually gave $2 trillion to BlackRock to buy across all markets, right? They weren't buying crypto, but they were buying stocks and bonds and everything else, right? To push the price of everything up, right? And that massive amount of injection of capital sent us from pretty much 5K, all the way down, you could say a 4K bottom in this area, right? All the way up. I'll just move my ugly head out of the way, all the way up to about 69, 70K, right? At the very peak and the very top. And at the start of November, I'm pretty sure the Federal Reserve meeting, it was actually a CPI release. I'm pretty sure it was on the 10th of November, 2021. They announced that inflation was actually above 6% and they decided to move from, inflation is just transitory, not going to be a problem, right? We had the war in Ukraine, which caused even more inflation, right? Because they did sanctions on Russia, and that sent inflation through the roof, right? So inflation wasn't going to be transitory anymore as soon as that happened, right? And so we had 6.1 inflation got hit. And then from that point, the Federal Reserve came out and said, inflation isn't transitory anymore. We're above 6.1%. We're going to have to move to QT. QT means that they're taking money out of the economy. QT stands for quantitative tightening. So when you're tightening, right, imagine like you're tightening off the faucet on a tap, right? That means that there's less water going to come out. And that's the same thing with the Federal Reserve. It means there's less liquidity coming out of the printer into the economy, and it dries everything up, right? Now, the alternative to that is quantitative easing. That's when they turn the tap on and it just flows like a fire hydrant and sprays everything. They spray the entire economy with money. They give it to everybody. They start new projects. They build tunnels, bridges, airports, all that sort of stuff, schools. They just create projects left, right, and center. And that gives people jobs, right? And then when people have jobs, they have money to buy things, right? And Bitcoin is one of the things that they buy. But when they're injecting the capital into these markets, right, into the global economy, some of that capital flows into the crypto markets, right? And now one of the biggest issues that people have had with, Bitcoin saying, oh, it's not an inflation hedge, because as soon as inflation hits 6.1%, Bitcoin stops pumping, right? So it's actually the opposite to an inflation hedge. But you got to think about it like this, guys. Markets work in advance. They don't work on what's happening at the time. And what happened was Bitcoin started pumping back here, right? It was a part of the inflation, right? It was one of the things that went up. Same with cars, same with properties, everything, right? While the money was being injected into the markets, that's when Bitcoin was going up. Bitcoin, the inflation readings that we get from the Federal Reserve and stuff like that, that's telling us the inflation of the price today compared to the price a year ago, right? So it's not like that is what the inflation is that we're currently getting right now. That's the inflation that we've had over the last 12 months. So that's something to think about, right? You need to understand what the data actually is telling us, because it's all good and well to be like, oh yeah, inflation is high right now. Why is Bitcoin dumping? Well, it's dumping because inflation is high right now. We've already seen the inflation, guys. That's why the price of Bitcoin went up. That's why the price of stocks went up. That's why the price of houses went up, right? Look at the price of commodities and things like that. They've all pumped as well. So I think it's really important to understand that, everything had already pumped, right? The price of everything had already gone up, and inflation is now high. So what's going to happen next? Because markets are all about what's going to happen next. It's not what's happening, currently right now. They read into the future. Some markets 6 months, some markets 12 months, but generally around 6 to 12 months is where you want to be thinking about where the market is going to be, right? And so basically with Bitcoin, it knew, right, the traders, the very, very smart traders in the market knew that high inflation above 6.1% and a move to quantitative tightening was going to mean the Federal Reserve, and then all other central banks would follow as well, would then suck that liquidity out of the market, drying everything up, and the price of all assets would start to go down. There's less activity in the economy, because things like interest rates are going up as well, which means it's harder to actually be profitable doing a project. Let's just say you're running a business development, right? So a property development, right? And let's just say you can borrow money for 2%, right? All through this period back here when capital was really cheap, you could borrow money for 2, even 3%, right? I was getting offered loans, in the US to buy a place at 2.5%, right? As a foreign citizen at that point as well, right? And you could get anywhere easily up to 4 with, for pretty much anything you wanted, right? Completely unsecured loans as well, being a foreign national, right? So capital was very, very cheap. So if you're running a property development and you have and you want to profit off that development, right? All you have to do is be able to beat the cost of capital to make that business worthwhile, and employ all these people, buy all these products and stuff like that, build the houses, build the townhouses, buy the land, do the subdivision, everything like that. All you have to do is be able to beat 2.5%, right? So if you can make 10% per year off that property development, let's say it takes you 2 years to do the property development, and you're going to make 20% off it in total. That means per year you're going to make 10%, and your cost of capital is 2.5%. So you're going to make 20%, and your cost of capital is going to be 5%. So 2.5 times 2 is 5%, right? So that means at the end of it, once you pay back the bank or whoever it is that lent you the money, you're going to make 15% for your efforts, developing that property, subdividing and building townhouses off it. So it's worthwhile doing. Now, the cost of capital for a project like that is about 12%, right? So if you're going to be running that same project is not viable anymore, because it's going to actually cost you 24% just for your cost of capital over the 2 years. 12, let's just say 12%, right? 12% per year times 2, 24, right? And you're only making 20% off running that business for 2 years, off that development. Now you're not going to do that business because you're going to lose 5% so you're going to lose 4% over the 2 years. So what happens is people stop doing those projects, and that happens right across the entire economy. And then business starts to slow down, less people get employed, and things start to slow down. You have GDP start to drop back, company earnings start to drop back, and then the big shift that happens is unemployment starts to go up. Now, at the moment, unemployment is actually really, really low at 3.5%, right? So that's the main thing that we need to watch out for, in case, would be one of the main indicators that a recession is actually coming, right? So what does all this have to do with Bitcoin? Now, the main thing I think we need to be thinking about is what is going to happen next. Now, we could be going into a recession, right? Because all those factors that I just talked about, right? We could be going into a recession because people are going to be doing less projects and stuff like that, and less people are going to be employed, less GDP, less, and that those people that have less, there's more unemployment now, right? Those people don't have jobs anymore. What do you think they're going to do? They're going to stop buying things. They're not going to be putting money into things like Bitcoin. They're not going to be putting money into things like shares. They're not going to be looking at buying a new house. So that removes demand from the market. The price of everything comes back down, normalizes, and now we have less inflation, right? But what happens is we actually start to have a thing called deflation, which is, what's happening at the moment. If you look at their charts of inflation, they're all sort of going like this, and then they go up, and it's rolled right over, and it's coming back down to the zone that we need to be in. Most of them are in like this area here at the moment, and they're crashing quite badly, right? So what happens if we go below this 2 to 3% mark, that we're going to be in deflation, right? We're going to be down here. And then what happens is they have to turn the printer back on and flood the economy with money, and that is called QE, right? And what happens is liquidity comes back into the market, right? They also lower interest rates. So now, it might be cheaper for me to get that cost of capital. Maybe the cost of capital ends up being 6% now. So 6 plus 6 over the 2 years is only going to be 12%. I can do that project. I know I can make 20% off it over the 2 years. So that means I can make 10% per year. That's 4% per year. So I can make 8% off that over the 2 years, and maybe I do that project now. Maybe I hire 50 guys to build the properties for me and everything like that, and then they all get employed. They make money. They'll go out and buy things. Somebody buys a new house. It adds more demand to the housing market. The price of houses go up. Somebody invests in a little bit of Bitcoin. Somebody buys a new car, right? And it starts to stimulate the economy, increasing GDP, increasing company earnings. Stock market starts to run again. All these sorts of things start to follow in, and it's increases what we call money velocity, right? And that's the speed of the transactions between people within the economy, right? How quickly are people receiving money from getting paid by their job to then spending it and giving it to somebody else? How fast is that money traveling throughout the economy? That's money velocity. And that's a really important thing to understand as well, because when money velocity drops, that's when you have a recession. People are getting paid. They're holding on to it for a longer period of time because they're worried about what's going to happen next, right? When you have fast money velocity, that's seen as a really healthy economy, because people aren't worried about where their next check is going to come from. If they're going to have money soon, so they spend money as soon as they get it. And it just leads to a much healthier economy. Maybe not as healthy consumer or bank account for people, and they're living more paycheck to paycheck, but that doesn't really matter in terms of economic health, with things flowing quite nicely, right? It's a bit of a different argument. But what does this all have to do with BTC, right? So if deflation continues to happen over the next few months, it's going to be really interesting. CPI report in about 2 weeks now, that will come out. I think it might be on the 10th of September, or maybe 13th of September. It's usually on the first Tuesday in the middle of the month. So yeah, it'll be around that point anyway. And basically, that will give us more insight into, are the Federal Reserve have to going to increase interest rates, or, is things going to start to, deflate even more, which means we're going to be closer to QE, right? When QE is eventually, they're going to have to start lowering interest rates and putting more capital back into the markets to stop, unemployment from going up too fast. So that is when Bitcoin will have its day in the park again, because when liquidity is getting put into the markets, that's when things pump. Now, this is probably the most important chart, and sorry if it's taken a little bit of time for me to get to this chart, but I think this is one of the most important things you really have to understand. And this is the global liquidity index. And we can see here the ECB, which is a European central bank, they have been absolutely nuking the liquidity in their economy, right? And they've been sucking absolutely everything out of it. And it has been happening for some time now. You can see this is where we ended up topping, right? And you can see Bitcoin actually front ran the drop in liquidity, right? Actually took a little bit longer until they started really withdrawing capital from the markets in the US, which is the green line, and also from the ECB. The ECB total capital in the markets topped around February, right? And so that's something to think about, right? That's the market moving in advance of what is going to happen with what the central bankers are going to do, right? That's what I was talking about before. Markets move in advance. All right, so we can see anyway that the global liquidity has been dropping off quite dramatically over the last 2 years since we topped at the end of 2021, right? Eventually, this is going to turn around. We did have a little bit of a run here earlier in the year, and look at what happened to the stock market. Global liquidity went up, to about the end of January, and stocks have been pretty much pumping. We did also have a very, very nice injection of quite a large amount of capital around March as well. We can see that on the USD index, right? Liquidity index. And that happened because of the banking crisis, and they injected, I've forgotten how much, but it was a few $1 billion to bail out all the banks, Silicon Valley Bank and everything like that, right? And that helped the stock market pretty much run back up to all-time highs. Let's have a quick look at the stock market here, right? That injection of capital gave the markets enough confidence to reach all the way back up to 3.7% away from all-time highs. Okay, so that's something to think about. Just that little pump of liquidity from here, and also they had a bit of a nice one from the yearly low as well. There was a nice little injection of capital back here, and look at what that did to crypto. Those two injections of capital just in the USD market led to 100% increase in BTC's price. right? We went from 16K, or the wicks all went down to about 15.8 or something like that. And we made it all the way up to $32,000 on BTC. So it's quite a run just from two main injections of capital. The rest of the time pretty much was either chopping sideways or pulling back with the USD, right? And look at what's been happening in Europe. The entire time, the ECB has been draining liquidity from the markets as well. The Bank of London has been as well, because they have insane amounts of inflation going on over there, mainly because of the war in Ukraine, right? The People's Bank of China also had been pulling out a fair amount of capital over the last few years, but we can see they're actually starting to stimulate again. And they did inject a lot of capital into markets. You can see the bars down the bottom here actually pushing pretty aggressively at the start of the year. So the two main things that we're watching here are the halving, right, which we're about to talk about in a second. It's going to be I think it's about 7 months away now, but April, sometime early April is the halving. I'll get the website up for you in a second, but basically we are looking at the halving and how that's going to affect the price and everything like that of BTC, because that works on the micro side of Bitcoin, because it's the internal factors and forces, and this is the macro side. So everything that's going on with the halving and everything like that, that's sort of like the internal business structure that you would be looking into if Bitcoin was a company, right? And then this is the macro factors, right, that affect everything around the market as a whole, right? So this is a really important thing to understand, guys. Possibly have over-explained it a little bit, but I really want everyone to, to really get a good grasp of this and understand it, because it is so important. If you understand this part of the economy, it can help you trade everything from stocks to crypto and just makes your life a lot easier, knowing, when most likely we're going to be in a bull market, when most likely we're going to be in a bear market. And, it was one of the major things that I used to sell the top. I sold pretty much all of my coins in this area here, around that early November time period, in between 69K and 75K. I did sell a little bit of other coins that I had around this 55 to 60K area chop zone that we had through there as well. Once we made a lower low through there, I thought it was pretty obvious that, yeah, it's probably done. So, I sold pretty much everything above 55K. And I sold all my altcoins before they crashed. And that was just pretty much when Bitcoin was about 65K. And I used, obviously the SFP, that was pretty obvious through here as well. But most of my analysis came from understanding the stock, understanding, what the Federal Reserve was going to be doing with quantitative tightening and how that was going to affect the markets, right? And it's going to be, it's going to be a similar thing when, they finally start to pull down interest rates and they start to inject capital into the markets. It's going to give me a massive edge to understand that all these charts here, these liquidity charts, especially global liquidity is the main one that we're going to be watching, starts to run again. Not very long ago in our Discord channel, when Bitcoin was chopping through here, I brought up a chart and I talked about, let's see if I can find the right arrow here. And I talked about this drop that was very aggressive in global liquidity while we were chopping through here. And a lot of people were expecting it to run to upside. And, for a little bit, we had a nice falling wedge in there. And it looked like potentially we were going to get a good run there. But, as soon as that, was pretty obvious it was going to roll over after we had the new daily low close below the range. That gave me the ability to be able to sell quite early before the big dump came in, because I was already fairly bearish in mind because of this global liquidity. It was dumping off very aggressively. And that's mainly because of the ECB dragging the whole global liquidity market down, right? So understanding this can give you a huge edge on the market because it will really help you set your bias. Now, when this starts to kick back in the other direction, right? So let's have a look at what happened throughout the COVID period, right? We had the COVID dump, and then you can see these huge amounts of liquidity all injected into the markets, and look what happens. Bitcoin pumps very aggressively, right? So this doesn't all happen just because, there's a couple of whales controlling the market or anything like that. There's huge economic forces behind it. And that's just the inflation and this is the quantitative tightening and quantitative easing, inflation, deflation causes right there. The other really important thing to understand is the part of the cycle that we're in as well, guys, and the Bitcoin halving. I think this is so important, and a lot of people are really overlooking it. What was Bitcoin doing at this stage of the cycle in 2019? Let's have a look. We did have one really nice run here, which is sort of similar to the run that we ended up having here. Right? If we look at this, we had about a 90% rally from the bottom. Or let's go from the real bottom down here. Right, it was about 100% rally from the bottom. This one was definitely a bit bigger, right? A 320% rally. And we had the plus token scam going on back then. So I think most likely this rally realistically should have probably only come up to about here and been about 150% rally. This one, yes, has been a little bit weaker, but this is a pretty solid level that's been holding us down. And in my opinion, miners are selling very aggressively. Now, one thing to understand is Satoshi's quote that the cost, excuse me, let me start that again, is Satoshi's quote that everything will come back, a commodity will always gravitate to its natural cost of production, right? And so Satoshi is actually hard-coded in for Bitcoin to go up in price over time. If you go and look at the hash rate charts, they're all going through the absolute roof right now. Things are just pumping higher and higher and higher. Jump on Coin. I think CoinGecko has it, and there's a few other charts on CoinGlass might have it also. Glassnode definitely has it for sure. You can go and have a look at the Bitcoin hash rate. It's just launching. It's going through the roof, and that means there's more and more computing power getting put into Bitcoin all the time. And it's just the chart is literally just going like this, right? And it's actually just recently reached all-time highs. So that means that Bitcoin is getting more expensive to mine when the hash power goes up and the difficulty increases, which is reset every 2 weeks. That actually means that the cost of production for BTC is increasing in price. Now, the other main thing, which I've got drawn out by these yellow vertical lines through here, right, is these are the halvings, right? And it's very important to understand the halving and why it actually affects the price of Bitcoin. A lot of people are like, yeah, the halving, it always pumps after the halving, but why, right? So pre-halving, right, the market is usually more stagnant. We can see that. Let's look back the pre-halving year back in 2 market cycles ago, right? We're in the same phase that we're in right now, the yellow box phase, which I call reaccumulation, right? So this was accumulation phase back here. This is reaccumulation. And the market is going sideways, very, very, very aggressively sideways through here in a tightening range, right? And we had one nice little rally, which was from the end of May to June, and it was about a 74% rally. And then the market went sideways again for almost another half a year, 133 days, right? So something to think about, that is for sure, or pretty much through this is definitely the second half of 2019, right? The market went very sideways and had a few pullbacks, right? We can see there was obviously a lot of selling pressure in here. My opinion is that was generally because we overextended throughout this period here. So because the plus token scam pushed the entire market much, much higher, which was a network, multi-level marketing, network marketing company in China that was buying Bitcoin with everybody that signed up. And, they scammed billions and billions of dollars, but all those people were buying Bitcoin when they signed up. And, the owners of the program were hoarding all of that Bitcoin. So it pushed us up. It was a big reason for why this rally was so aggressive. And why I think it has outperformed this rally so much and also outperformed this rally so much as well. I can't remember how much this rally was. It was only about 100%, right? From the bottom of the wick to the top of the wick, about 150%, right? So, without the overshoots of the wick, it's very similar. It's around about 100%. It's very similar to this rally that we had here out of our accumulation range. So realistically, I thought this accumulation range might come a little bit lower, but this is realistically the accumulation range here, or, you can claim if you wanted to that was the accumulation range back there. But in my opinion, accumulation was this area here where the FTX dump and that put in the lower SFP, basically the spring of the accumulation range. And now we are in the reaccumulation phase, and that might not even get all the way up to 50K. We could just stay here for the rest of the year, oscillating in between 25 or even come back down to 20K and 32K. But in my opinion, we might make a move up to around this 48K area, which is the top of this rally back here. Would make a fair bit of sense. And it might end up doing something like this. Right, and then the halving comes, maybe we get a rally before halving or something like that. Now, I should say, small caveat, that absolutely anything can happen at this point, especially if the BlackRock sorry, I said FTX, the BlackRock ETF gets approved. It can definitely change the trajectory of how long things to take to play out. But so basically, if we look back at the market in the previous times of the reaccumulation phase, in this part of the cycle, right, and also in this part of the year, right, is usually majority of the time the market is just going sideways, right, all the way through here. Right, June all the way to the end of September in 2019, the market was very, very flat, very, very sideways for a long period of time. Very similar to what's happening here in the middle of the year. And the reason why that happens is because everybody's on holidays. Everybody's either in Mykonos or they're in Spain somewhere. Everybody that works in finance anyway, or they're hanging out in the Hamptons with all their friends, right? Sipping on champagne, laughing at how much money they stole off everybody. But that's generally how it works. And markets are usually flat in the middle of the year, and that is why Bitcoin is not pumping right now, because we're in the reaccumulation phase, which is generally flat, and we're in the middle of the year, which is generally flat as well, because everybody's on holidays. And on top of that, there is market absolutely drastically being sucked out of the global economy right now. So why would Bitcoin be pumping right now? It literally has zero reason to be pumping right now, apart from rumors that the BlackRock ETF might get approved, and that's going to send us to, $250 billion per coin, which, might eventually happen. And I'm going to talk about that in a second. And the reason why that possibly could happen is around the halving. Now, we're talking about Satoshi's quote that he wrote in the white paper, that the price of an underlying asset will naturally gravitate to the cost of production, right? Now, miners sell excess coins that they make. So the way that it works is they will process transactions. When we send Bitcoin to each other, the computers at the miner zone, they process those transactions, and they get randomly, every 10 minutes, they get a certain amount of Bitcoin awarded to them, right? At the moment, I'm pretty sure it's 6.25% or something like that. And after the halving, it's going to cut down to 3.125 coins every 10 minutes awarded to the miners, right? So what they do is they pool all their pools together, all their miners together into big pools, and then they share the rewards. So it randomizes a lot less and becomes a little bit more predictable for their business. But what they do in this reaccumulation phase of the market, right? What they do is they sell extra Bitcoin that they mine. So all of the coins that they're buying, that they're mining, because they're paying electricity to mine those coins, they're selling all of them on the market as soon as they get them, right? They're selling. And if you go and look at a spot CBD anywhere, it's always going down, right? And CBD's cumulative volume delta, and it shows how many people are selling versus buying for that particular asset, right? And for spot Bitcoin, it's always trending down, especially in this time period, and that is because the miners are constant sellers into the market, and they're constantly putting downwards pressure. They're actually the biggest seller out of everyone into the market is the miners. It's not just like some big nasty group just, sitting around being like, let's suppress the price of Bitcoin. Yes, that would be so good. Or the weekends are going to sell to us. It's actually the miners selling because they need money to run their business, and they need to stock up, right? In this period here, they need to stock up on cash, right? They need to stock up on cold hard cash, because after the halving, what happens? They get half the amount of Bitcoin every single time they get paid, right? So all of a sudden, the cost of their production is going to double overnight. So as Satoshi famously quoted, the price of an underlying asset will gravitate to the cost of production. Now, JP Morgan says that they believe the price of Bitcoin, the cost of production of Bitcoin, will be around $40,000 after the halving, right? We're currently at 25K. So what that means is every Bitcoin that the miners were going to sell, if the price of Bitcoin is still at 25K post halving, they will be losing $15,000 for every coin that they sell. So what do you think they're going to do? They're going to stop selling, right? They stop selling after the halving because they are thinking about what the market's going to do in the future, which is most likely going a big run, which was what we did after the halving in 2020. It's what we did after the halving in 2016 as well. Right. So they're predicting that we're going to go on a fairly large rally, even if it doesn't go to a new all-time high. They're still thinking it's most likely going to go up to around 60, 70K. Maybe it'll go up to 100, maybe it'll go up to 150. But they have a trading desk, right, that is trying to optimize and sell their Bitcoin for the highest maximum amount possible, right? They're hedging out and everything and all this sort of stuff, and they're building stacks the same way as we're stacking sats. They're stacking sats as well to maximize the amount of money that they make from the cycle, right? So they sell as many as they possibly can before the halving. Then after the halving, they stop selling and they try and hold on to as many coins as they possibly can while they start to burn all these dollars, right? They start to burn all the dollars they accumulated throughout the reaccumulation phase of the market in the last 6 to 12 months, right? So they don't need to be selling their Bitcoin post-halving. They can use the capital reserves that they've built up in their USD stores. They can use that to pay for the electricity and their employees and, fund the new computers and repairs and all that sort of stuff to run their business, right? Pay the traders, pay the accountants, all that sort of stuff, right, to fund their business, and they can hold on to their Bitcoin. And then what that does is that removes a massive seller, the biggest seller in the market, all of a sudden gets removed from the market. So we have the same amount of demand, but the supply into the market is dramatically cut. What do you think happens, guys? Basic microeconomics, we start to rebalance higher because that demand will constantly push the price up until it finally meets the equilibrium of supply, which is much higher, right? And then demand slowly starts to slow up once we find higher prices, and the market will then rebalance at a new higher price. Right. I think it's very important to understand these factors and how they're all working, and it's not just, a bunch of, jerks behind the screens colluding with each other, being like, oh, yes, let's organize to pump the market after the halving. And then we're going to dump on everybody, a year later. Like, these things are actually happening because they're hard coded into the Bitcoin algorithm, and it's how the economy, the internal economy of crypto markets work. So you combine that and with, the fact that Bitcoin was created in 2008 and has a 4-year cycle, and the business cycle is typically around 8 years, right? So, it's all tying in, and you have to think about it as well. Bitcoin 4-year cycle. The US presidential cycle is 4 years as well. All those things tie in because that has an effect on the economy, and it also has effect on the, the stimulus packages and stuff like that, and also, how the Federal Reserve reacts and everything like that, and how things react with the economy as well, the stock market, reacting to what's happening with, who's the president that's getting elected and what are their policies and how does that stimulate the economy and cause inflation or deflation, right? And so those things tie in as well. And that's why Satoshi was smart enough to create a 4-year cycle, and he launched Bitcoin in 2008, which was at the bottom of the global financial crisis. Let's go and have a look at how that happened. Satoshi came out and released Bitcoin in this area back here in 2008 when the chancellor was on the second bailout of banks, right? And so he started it in 2008. And then that's when we started getting all the stimulus getting pumped into the market. So being a 4-year cycle, it's in the Bitcoin cycle is actually in timing with the liquidity flows of our general economy. Now that might not stick forever, and eventually we might have the Bitcoin halving cycle get out of whack with what's the presidents of the world are doing, and what the ECB is doing, and the liquidity flows and stimulus programs that politicians are putting into place might get out of whack. But at the moment, it's still very much aligned. So there's a whole heap of things happening next year and the year after. So 2024 and 2025, we possibly could have QE start to kick in, right? Which is quantitative easing, which is turning the tap back on, loads of capital coming back into the market. We also could have the ETF, right? The BlackRock ETF. This could start to take effect sometime around the halving as well, right? So both these increases of demand, right? Demand plus demand, right? And then we could have the halving, right? Hopefully that makes sense, halving. Right. And that is going to be in decreasing supply. So we could have a case where we're having massive stimulus getting put into the markets, which is going to hugely increase demand. We're going to have potentially an ETF finally getting approved by the SEC, a spot ETF, which is going to cause a huge flow of capital because it turns the tap on to all the really high level liquidity that's in pension funds and in all, a lot of institutional accounts, that all the biggest money in the world holds their money in all of those accounts. They're going to be easily be able to buy crypto and hold it in a place that they trust with BlackRock, somebody they already interact with. They're the biggest asset manager on the planet. They have about $8 trillion under management at the moment. Just a small amount of that needs to move from cash. There's about $5.5 trillion of cash in the market at the moment, sitting on the sidelines, waiting to find a home. So, a small percentage of that flows into the Bitcoin spot ETF, and, that's going to massively cause huge waves of demand, right? At the same time, we're just having the halving happen, which is going to decrease supply. So we could have a situation where we have two huge factors with stimulus, right? Quantitative easing, economic global macro demand, right? Global liquidity increasing. We could have spot ETF approval, right? For not just BlackRock, but ARK and Fidelity and VanEck and everybody else, all trying to get in on the spot ETF, right? To really open up those floodgates of liquidity from all the institutional liquidity and institutional demand, along with, the supply cut at the same time from the halving. And that really could lead to quite an epic pump in 2025, right? So those are a few things to think about. And, that is the reason why Bitcoin isn't pumping right now, because it's not the right time. It's not the right time in the cycle, and it's not the right time in the year. And when is the right time? The right time is going to be post-halving. It's going to be the end of 2024, because when the halving happens, it doesn't naturally just start to launch, right? And, spot ETF could change that very quickly, but let's remove that. Just thinking about the natural supply and demand forces, it does take a little bit of time for, the supply, the market to realize that the supply isn't there, that the supply is dried up. Now, one thing to think about, in the last cycle, the amount of Bitcoin that was being put onto exchanges was going through the roof. This cycle, the amount of Bitcoin on exchanges is absolutely plummeting. If you want to go and have a look at that, you can go looking at Glassnode's at Bitcoin on exchanges. But basically, the chart looks like this. It was absolutely launching all through here. And then since we have had this bear market, Bitcoin on exchanges is rolled over completely. And it's down literally near similar levels to what we were when we were at 3K. Because people are taking their Bitcoin off the market. Now, that creates a low liquid market. So the marketplace is actually illiquid. And that means that, there's not as many people on the marketplaces ready to sell. So the supply isn't there. Also, there's not as many people with buy orders in there as well. So sell-offs can be bigger, and pumps can be bigger as well, because it moves quicker throughout the price of the order book. So that's something to think about also, right? that the low liquid market can also lead to larger price pumps as, we gap up faster, and also larger pullbacks. And we could end up in a situation that was much more similar to 2017, where the market would pump really, really aggressively, a few 100% at a time, and then would pull back 35 to 40% at a time. We didn't really have that in the last bull market, right? There wasn't those big pullbacks. This pullback was probably the biggest that we got, and that was only about 30%. There was no huge pullbacks of 40%, etc. We did have this big one, which was sort of like part of the top getting put in, which was about 50, 52%. And that was due to really bad issues with, basically Tesla stopping taking Bitcoin payments. And then the one that really killed it, though, was when China banned mining, and pretty much 75% of the miners were inside China at that moment. And so all the miners dumped their coins like absolute crazy, and market sold because they all panicked and they all freaked out. And then they tried to leave. China. Not sure what's happened to my camera, but I'll try and fix it in a second. But yeah, basically, all the miners in China, they all freaked out and they sold really aggressively, which is why that we had that big 50% sell off. And then, we started getting a bit of momentum back again, and we started to run. And basically, the top was put in by the Federal Reserve when they came out, so we're going back to QT. So that's something to think about anyway, guys. Not sure what's happened to my camera there. But we're going to wrap up the video here anyway, because I probably talked for long enough. But hopefully that makes sense. So if you got something out of this video, please share it with your friends. Help me grow my channel and make more content like this for you. Please give us a like and subscribe to the video, and we'll catch you all in the next vid.